everyone, it's Becky Lightman with Lightman Capital. I am delighted to be here today with Amy Snook and Noreen Payne. They are a wonderful team of realtors here in Delray Beach, some of the smartest women I know in the business. And as you know, I've been posting a lot on Lightman Capital about the housing market. And it used to be, even 4 months ago, we knew that it was growing. It was almost going straight up, at least here in Florida. And now it's a very confusing time. So I thought we would circle back with people who have experienced that complete boom time, and even just fast forward to the 4-month period later and see what's going on. But before we go there, I thought I'd give them an opportunity to tell you a little bit about their background. So Amy, do you want to start us off?
Sure, my pleasure. And Becky, thank you for having us. This is exciting, and we appreciate the opportunity to sit with you. So Noreen and I have a unique background. We work together in corporate America, sales and marketing. I'm not going to say the year because then people figure out the age, but a long time ago. Yeah. 20 years ago, came into real estate, and in 2015, we formed our partnership, the Amy and Noreen team. So
corporate and telecom specifically, and then Amy real estate and the title company. So she's got the really extensive background and when it comes to real estate, all facets of the industry. So it's been exciting joining.
So in 2015, you paired up after knowing each other in the corporate world. Not totally a career shift, but maybe a career shift for Noreen, sounds like. What was it like in 2015 here in Florida? You guys focus on Delray, but I think you do a large geographic area. Tell me what that was like. And then if you could fast forward that to what you have been seeing this year, that would be interesting.
So the past 3 years have been like nothing we have seen in, my gosh, probably ever. And I think a lot of clients in the market would say the same thing. I mean, when COVID started, we all thought, oh my gosh, what's going to happen? Little did we know we'd be running like crazy people for 3 years straight, and honored to be able to do so with our clients and our referrals. 2015 till now, just, especially in South Florida, our price points have just increased, as they have all around the country. It's hard to answer about 2015 till now because our business has changed so much from 2015 to now, because we're so blessed with referrals and relationships with clients, and it's taken us to all parts of Palm Beach County because that's where the referrals are, to your point about our area that we cover. The past 4 months, and then I'll turn it over to Noreen, I kind of call it the great pause. I think everyone just went, wait, what? And everyone's just been evaluating, but homes are still selling. Homes are coming on market. It's just at a slower pace. And I think, and I'm sure you would agree, it's good for us all that it didn't keep escalating to the degree that it was, because it's unsustainable. And that wouldn't be good for any of us if we had a crash. So now, Becky, it's more just a slow down to more normalcy. It's summer, and we haven't had a summer season in 4 years. So more inventory is coming on, which is great for buyers and sellers alike.
Hold on, I want to ask a question about the summer season.
Okay.
So we haven't had one. Is that because the growth just continued and we didn't have any seasonality like normal? People didn't go back to New York or New York?
During COVID, that's what we saw. I mean, and even local residents, right? So during the COVID and quarantine and whatnot, people weren't leaving like they usually do here in South Florida during our summers. People stayed, and they're in their homes, and they're realizing, oh my gosh, my walls are going. You need more space. So that's probably, and then of course, anyone in the Northeast going through their winters are realizing, watching us down here at the beach and in our pools going through quarantine, right? So I think, we've not had the typical season that we usually have had. You would think that the real estate season, the buying frenzy would be during summers, versus winter, but our area is a little bit different. It's the opposite, right? Because everybody usually leaves during summer, and that's, in my opinion, and Amy chime in, we're seeing a normal summer season here in South Florida.
Yeah, and I'll add, there was so much pent up demand, right? People were just held back. Then when the floodgates open and we could get back out, it couldn't get caught up, which, it took this whole time until interest rates, inflation, and a lot of other things. That's a whole separate conversation. Hence why we didn't have seasons, or slow seasons, I should say.
Well, let me ask a question. So now it sounds like it's shifted a great deal, but it's more that it's everyone's taking a step back. And I can tell you that that is not unique to the real estate industry. In my industry, we look at consumer spending at places like Walmart and Target, and we gauge consumer sentiment, and everybody is pulling back. And as you know, I work with a wealthy clientele, and everybody is pulling back. Doesn't matter how much money you have. Everyone's nervous when you see the markets go down the way they have. And in our market, there's a lot of cash buyers who have large stock portfolios, that when you see those portfolios go down, your wealth effect, your feeling of your personal wealth goes down too. You feel like you don't want to spend. So what we see is a dramatic pullback in consumer spending that's affecting everything, not just real estate. I don't think it's affecting you guys actually as much, but it's affecting the travel industry. People just are not wanting to pay for these airfares anymore. They're not wanting to pay $1,000 a night for, the Hilton Garden Inn, not to pick on them, but that's, that's the situation. So, but I think that maybe it's more muted for you, but we're seeing it across all of the sectors, a nervousness to pull the trigger on larger purchases. And I don't know if that's what you're seeing, but I was thinking that might have something to do with the pause, but I don't know that it's going anywhere on your side.
Well, and let me add something, which I know you're not going to love when I say, is there are a lot of people who are so heavily invested in the market that are now saying, let me add real estate to my portfolio, that it might not have been mixed in previously. So we have new wave of buyers, not necessarily looking for the $2 million, $3 million purchase. They're looking for something that has the cap rate and the return on investment from a rental perspective. So I think people are just testing different waters as well. But at the end of the day, we've been, all of us, Becky, you included in your industry, we have seen the ups and the downs, and this will pass. It's a matter of how it passes and when it passes, but people will always be buying, selling, investing, right? And we know your reputation and how fabulous you are. That
I try. I don't know that the market's cooperating, but
again,
thank you for that.
It's a pause. It's a brief, and we will at some point, right? We just all have to stay strong and stay in the game.
So do you think the market is favoring buyers or sellers right now? That's a tough question.
On the price point.
Yeah, absolutely. It depends on the price point.
So can I talk about the market?
Yeah, absolutely.
Every month we evaluate the numbers that come out of Florida Realtors, National Association of Realtors. And, when you watch the news and they say 1.7 months of inventory, it's a strong seller's market. That's just an average across the board. When we talk about the strength of a market, we look at the inventory, meaning how many months, if nothing new came on the market, how many months until what's on the market is consumed? 5 to 7 months. I know that this is a balanced market. So it depends on the price point here in South Florida. We'll take our area in Palm Beach County as an example. 300,000 to 600,000 right now price point is flying off the shelves. It is a seller's market, a very strong seller's market. But what has happened prior to COVID, the $1 million and up, we had over 15 months of inventory. That is an exceedingly strong buyer's market. Remember, 5 to 7 balance. We have now crept up from 1, 2, 3. We're now at 5 months of inventory, $1 million and up, which means more inventory is coming on, and it's balanced. And that's really, I know our sellers aren't going to love hearing us say this, but this is really good for us all, because you want balance. You want, you want to go back to, I hate to say sales 101, but really people coming together to make it a win-win situation.
Right.
Because it hasn't been like that for the past 3 years.
It has not.
So you're not gonna see, will you see still the sight unseen cash buyers in that million and above market? Or has some of the bidding war, like, are the bidding wars still happening?
So, and again, Amy can jump in on this as well. The bidding wars are still there in the below the million price point. We are still doing some of the virtual sight unseen. And in this case, it also depends on the type of home it is as well. Is it going to be, it could be a more of a larger investment opportunity for someone, a second home, perhaps, it's move-in ready, been renovated. So I think it depends on the home itself. We're not seeing it to the level that we did obviously before, when people weren't traveling as much, and there's not necessarily that high chaotic frenzy, but we're seeing a little bit, I would say, but on the whole, not as much.
Mm-hmm.
Can I add, if that's okay?
Yeah.
And agree with everything Noreen said. The only thing that I would add to it is it's a very price sensitive market.
Mm-hmm.
And I think a lot of sellers haven't come to that realization yet, that we can't just pick the pie in the sky number and there's going to be offers start flowing within 10 seconds. It is a lot of homes, when there's a mortgage, aren't appraising because the numbers are so crazy, they're all over the place. So when you price high and it sits and you reduce, and it really hurts in this market. So being realistic on the number, to your point, Becky, it still can bring the emotion and somewhat of a frenzy and
Right.
multiple offers, not as much sight unseen offers, because people can get on a plane and come down to see.
Mm-hmm.
So averting the risk as much as they can. And we agree with that.
Yeah, but like you said, it's got to be priced well, and work versus move-in ready, new construction or renovated, right? And staged well, etc. So.
Right. No, I think that's interesting. One of the things that, Amy, you have said in some of your market reports, or maybe you both said this, is that the realtor market in particular was saturated with a number of people that really weren't professionals, that may not have had to do the same level of marketing that's now required. Could you talk a little bit about what's required to sell a house now versus, the height of this frenzy?
Absolutely. Trying to decide how to say this the right way.
It's time to now go back to, like you said, sales 101, and actually we're having to the days of putting something in the MLS and sit back and your phone's ringing. I mean, we're out there now, sales 101, working and actually selling.
Yeah, Noreen and I are very involved in the community as well as the industry, and the level of professionalism is something that's very important to us. So what happens in a market like we've been in, it looks easy, right? Get a listing, put it in MLS, it sells. But the truth of the matter is, our job is to guide our clients, and always like what we say when we share numbers, etc. We're kind of a dose of reality sometimes, but that's our job, right? We do this every day. I'm sure, like Becky, you as well, your clients rely on you for your expertise. So when we have an industry, a time like this, and like we've had in the past 3 years, a lot of people come in and get their license. And what happens to those of us who do it for a living all day long, every day, you compete for these listings where, other people saying whatever number you want to list it for. Well, that's a disservice to the seller, right? So we need to be realistic. We give our guidance. Our sellers get to make the final decision on the numbers when we list a home. But then it's not just put it in MLS and pray that someone comes. It's doing a feature sheet, because homes don't sell themselves for the highest and best price, right? At times they might sell, but our job is to get the highest and best price for the least amount of stress for our clients. So the sales 101 is, what is your marketing brochures? What's your marketing strategy? How are you marketing? How are you communicating? Are you doing open houses? How you handle your showings, right? To sell the attributes of the home and match the right buyer with our listing is more critical than it ever was. So when sellers are interviewing agents, I think there's a lot more critical questions to ask now as we head to this next phase of real estate market across the country. The quality and the caliber matter.
Absolutely matter.
Right.
Yeah.
And
It's
hard
yeah.
work, because honestly, you're not gonna sell a house in a environment that's a little bit unsteady or giving people pause. So you're not gonna be able to make that sale. If you don't know what you're doing, you're not hustling, for lack of a better word, but it's work, it's hard work.
Working hard. Yes.
Yeah.
So, last question for you, both is first of all, where are mortgage rates? And how has the increase in mortgage rates affected your business?
Absolutely. I'm gonna take it. So as far as mortgages are concerned, I think it also depends on the price point to some degree as well. You know, the under million, those tend to be, unless they're investors, of course. We have got the investor buyers that are potentially usually buying with cash. But with mortgages in the under $1 million, 90% of those are being done via mortgage, and it has affected they're a little nervous with the way the rates are going, but they're still here, they're still buying because they want to be in our area. But I'll let you elaborate.
And I was just going to add, I mean, the rates just dipped a bit, right? But
Right.
you know, but we have such a distorted perspective, right? I think about when I started however many years ago, I mean, interest rates were 15, 16, 18.
Right.
Guess what? We sold homes, people bought homes. We got spoiled from almost free money over the past, next number of years. So the pause when interest rates started rising, I think people paused, but people still are buying, selling, marriage, divorce, debt. I mean, events still happen that cause homes to be sold, purchased, etc. And maybe people can just buy, the amount they can purchase has changed, but it's not that they're not purchasing, right? So the $500,000 buyer maybe is now a $425,000 buyer.
Right.
And I think the other aspect of it, again, just taking an average, in Palm Beach County, I think last month it was about 30% of all purchases were cash, right? So we're somewhat insulated because we have a higher percentage of higher end homes in Palm Beach County. So it skews the numbers, the median and average are the same, right? So to me, again, the great pause as we have been in that we're starting to come out of is really just everyone going, wait, what's happening?
Right.
Oh,
Right.
I can still borrow.
Yeah.
I can still get a mortgage. I might just change my search parameters a bit.
Right. Because even though they are rising, they're not to the levels like you mentioned earlier, the 15, 16% when people were still buying, right? We're still pretty strong, but not the like free money we had.
It's been
A few months ago
low for a long time. And something that
spoiled.
I've looked at is that the mortgage applications have dropped to a 22-year low. That's extreme. That means there's a dramatic sentiment shift about doing this moving forward. And maybe we are insulated and some people are going to pay cash, but broadly on a national level, that's dropped quite a bit. The other thing that we see on our side, just for borrowing, bank borrowing, mortgage borrowing, is that interest rates do tend to normalize for people. So if you were in the 80s and you were getting 8 or 9% mortgages, that was normal for you. And at a certain point, we're going to have this mindset shift up to these higher rates. The other thing that we have seen in the past is that people will adjust to their monthly payment. And that means they'll go for a different product. So if they will move, for example, from a 30-year fixed to an interest-only mortgage. So there's ways and more options than ever for consumers to get into homes at their price. It just is a change in the way that they finance things. Now, in our office, we have our office manager is buying a house, and she's 26. This is her first house. And she was asking, what do I do? since the time I talked to the mortgage lender and now things have gone up and now I have points. And she got 3 different answers from 3 different financial advisors on which product to do. I like interest only. My partner likes 7-1 ARMs, and everybody has their own opinion. And in the end, the buyer's going to just make that decision what's right for them. And that is kind of a pathway for them to get around a rise in interest rates. So it's one of the things that I think makes buying still make sense if you can just navigate that mortgage market with a good advisor like you guys. So any other thoughts you can leave us with on the real estate market and what to do here?
Good. I mean, I was gonna say, I would hope, and I would think that, and encourage people to still come look, come see, don't be stressed and don't be nervous. There's some exciting things going on, especially in our area, and inventory is coming on. And as Amy mentioned, we're starting to see a little bit of a more balanced market. So it's an exciting time to still be coming down and dipping the toe in the water and doing some buying and selling. So it's a good time.
Absolutely. And the only other thing I would add, and Becky, you said it so well, the pause was this shock of, wait, interest rates are going up. What's happening here? I don't know, right? Gas prices, et cetera. And it becomes the new norm. And I think now more than ever, to your point exactly about the mortgage, people need to surround themselves by people who are experts and they know and they trust, because someone may be able to an interest only or balloon mortgage, that might not be the right solution for them. If emotionally down the road to know I owe it is going to keep them up at night, I'd rather just know I have a fixed rate and it is what it is and I budget. So I think who you surround yourself makes such a difference to get through these difficult times, because 7 different people, 8 different answers. So right, so just make sure you're making the right decisions on who you partner with. Right. And that's why we refer people to you, because we trust you, and it makes a very big difference.
Absolutely.
When we give a referral.
Navigating a really weird time. And
yeah,
you know, it will be something that we look back on and say, remember those 3 years. Yeah. And we're going to learn a lot. I think we're going to come out of this on the other side. The great financial stimulus experiment is, now we know how this ends. So,
that's exactly right.
But anyway, thank you so much for joining us. If you are interested in talking to Amy and Noreen, you can visit their website, amyandnoreen.com. They are fabulous, and I'm sure they can help you. And I'm so blessed to have you on the show and appreciate it so much.
Thank you.